Okay, so welcome to another episode of the Data Center Exchange, a Harper Harrison podcast aiming to shine a light on the key topics and talking points across the data center industry. Now, as we know, there is a significant amount of capital deployed across the industry, and whenever that's the case, there's always lies, risks, and reward for businesses operating within it. And that's kind of what I wanted to cover today. I wanted to explore the risk in some of the deals across the industry and just risk overall across the industry, and look at kind of what drives value and also what can have a negative and positive impact on value too. And I have a really good guest today who I hope can help me delve into this topic even further. It's someone who sits at the intersection of legal strategy, commercial decision making, and risk across the industry itself. He's based in the USA. He works for Marsh. He's senior advisor for Marsh, working closely with developers, operators, and investors across the industry. So his focus isn't just identifying risk, but also helping businesses understand how that risk impacts value and operations and long-term outcomes as well. He will explain all of this better than I will. But without further ado, I'll welcome Dereck Wischmeyer onto the Data Center Exchange podcast. Dereck, thanks for joining today. Appreciate it.
Yeah, of course. Of course, Del. Thanks so much for having me.
No, great that you could help me delve into this topic. I probably butchered your existing role, so I'm going to give you the opportunity now. Your platform to. I always start with your background from the earlier years, really, in terms of how, what you've done from kind of leaving college and your journey up to where your point is now with Marsh.
Yeah, sure. They always famously tell you you can't point an arrow and pick your adventure and career. If you had told me I'd be in digital infrastructure when I graduated law school, I probably would have scratched my head and said, "What is digital infrastructure?" I'm probably dating myself with that response. But graduating from law school, my sincere passion was real estate development. I graduated in 2008 into a difficult market. So picked up a lot of work doing foreclosure work and litigation around construction, and really honed a focus on construction representation everywhere from zoning, land acquisition to contractor agreements and financing. I transitioned from that to an in-house role, two of which, the first was with a large commercial lender and helping that business sell to a public entity as a junior associate attorney. And then oddly enough, I found myself in a cruise line, same situation. We were helping a cruise line sell from a private equity backed multiple line carrier to a public, well-known household name. Following that, I basically developed a pedigree for helping private businesses sell to larger or public companies. And that's where telecom came knocking. Early in my career, I joined a company, Light Tower, which was a phenomenal private equity backed business that was ultimately being packaged up and sold and acquired ultimately by Crown Castle. Spent a few years with Crown Castle in-house, which really put me through a regulatory boot camp because it was at that intersection of 2018 when the FCC's third report and order was released that changed a lot of the underpinnings and support for telecom expansion in the United States. So I had, coming from non-telecom background, an opportunity to really broaden my knowledge at the new law that had just come out. My focus became mostly wireline and fiber installations. And I took that experience to join Everstream Solutions, which was a private equity-backed fiber provider in CLEC out of the Midwest. Had a wonderful run with that business for about 7 years, massive amounts of inorganic and organic growth through that 10-year debt financing. Had a really great run, and then transitioned from that business into the data center world. Everstream had operated a few small pop and co-location data centers, and we had some points of presence for our customers. So I gained my knowledge into the data centers through Everstream, and I took that experience and my prior passion for real estate and zoning into a data center business where I served also as general counsel. Marsh came knocking with a nuanced idea to say, hey, our clients are growing at lightning speed, and they could really use operational feedback to help keep up with some of the risks that they're seeing from an operational standpoint. And so that's when Marsh had approached me to join their team with my current title of senior advisor. And what I do with Marsh is very new to industry, and the value has already been very well appreciated. I jump in and help our clients and potential clients navigate operational risks that either they haven't noticed, they haven't seen, because I come from all sides of telecom and data center development, or they're running so fast to keep up with the demands of their own construction, their own lease agreement negotiations, and their own financing, that it's helpful for them to have a separate set of eyes on them. So that's what I'm doing today and helping Marsh grow and expand our data center infrastructure and digital infrastructure practice.
Yeah, that's great. Thanks for the background. Another guest that kind of fell into the data center industry. It's by design, we always say it's kind of invisible. So it's always interesting to hear the journey of how people got into it. But no, it's great. And obviously, you mentioned your role now. Going into kind of today's topic, the industry has grown. We entered the industry ourselves in 2018, and the change and the level of investment and the scale of everything has just shifted beyond what we ever thought was kind of possible, really. How has the risk kind of changed and evolved with that, and how much has the risk grown and exposure, I guess, in line with the industry?
Yeah, I can assure you it's keeping up with the expansion. And like you identified, we're seeing our clients now grow from what used to be 5 megawatt co-location facilities. Now we're talking 2 gigawatt behind the meter self-generated power facilities. And along with that growth comes, I would say, on par risks. And the risks are ever changing, and the risks stem from multiple avenues. One of the more common ones we see now is the NIMBY, NIME, that didn't exist at this level 2 months ago, much less a year ago. But it also stems through to the SLA protections in place for the tenants in the hyperscale data centers, as well as the co-location, and all the way through to procurement and long lead time items, as well as the construction with the EPC and general contractors. So the risks are abound, and they're continuing to keep up with the pace of the growth of the industry.
Yeah, so they're everywhere essentially, and they're
Yeah,
growing in scale. Okay, so
unfortunately, yeah.
yeah, and I guess when you get involved in a certain situation, I guess this can vary, but are you getting pulled in kind of prior and to assess, or is it a case of things have already gone wrong? And if so, kind of at what stage are you generally pulled in at? What's normally gone wrong by the time you're pulled into something?
Yeah, it's a mixed bag, Dell. It truly is. But I would say, fortunately for us as well as our clients, that we're getting pulled in earlier and earlier. We like to say it's best to get us and as many hands on deck early in the game, and that's even even pre-acquisition of the site phase for a data center, or pre-lease phase. It depends on what the developer's moving forward with first. We see multiple flavors. But the earlier you have all hands on deck, especially from the risk standpoint, the more help you're going to get on the tail end. A great example of that is something that Marsh does that I think is unique. We offer site and acquisition review services that include, CAT risk analysis, that we have a very specialized team that runs a CAT analysis for just the land acquisition. So if our client gives us coordinates, we can pump that through our database and give them a feedback and an output that provides what the insurability of a data center in that location would be. And where we're seeing that early value is actually going to the hyperscale tenants that may be triple net leased, to show them what their operating cost will be given just the geographical location. So that is one example, but also the earlier we can touch point on the review of EPC contracts, the lease agreements, and what we're seeing now, a new risk, as we discussed, the ever-growing risks in the industry, the procurement phase as well for the long lead time items, especially with power generation.
Yeah, that's interesting. You've noted a couple of kind of different stages there, but where
Mhm.
where are the deals becoming more complex and I guess risky? Is it the earlier stage land acquisition? Is it power? Is it the
Mhm.
hyperscale contracts? What are you seeing any kind of synergy there at all?
Yeah, we are. And I'll tell you, it's also with the ever-growing change in the industry and that power consumption demand. I would say there's an immense amount of new risk that wasn't being looked at 2 years ago, and it's for the on-site behind the meter generation. Geographically, Texas has become a very large hotspot for data centers, and the state, from a regulatory standpoint, is very welcome to them, which is wonderful. However, it's a bring your own power situation. So we're seeing a lot of data center developers focusing very heavily on the power component, and the hiccups that we see there are multiple. The largest one is probably the long lead time gas turbines or whatever source of power that they're looking to procure to provide that uptime and that power generation. We're seeing risk in the procurement, like I said, the transportation. Um, but mostly it's not site selection, it's power generation is where we see the initial phase of risk.
Yeah. Okay. No, that's good to hear. In terms of the risk, do you feel the developers are taking on more risk? Because obviously the rewards are pretty significant. The stakes are high, as I say in the industry. So,
Mhm.
are developers taking on more risk, do you think, at this moment to secure capacity in the market?
Absolutely. At Marsh, we represent the whole swath of the ecosystem. So from hyperscaler to power generation supplier. So I can speak easily to say that we're seeing a change in the industry where coming from both sides, right? The lease agreements from the hyperscalers are including more and more strict SLA terms that put that long-term revenue of the tenant at risk, and also operational requirements on the developer. But we're also now seeing the EPC contractors, because there's such a shortage of talented labor, pushing back as to whether or not they're even able to assume new jobs. And when they are, they're assuming less and less risk through their EPC contracts. And so from both sides, what that's creating is more risk being borne by our developer clients.
Yeah. Yeah. Okay. No, that's interesting. And is that where they unknowingly almost give away more value, or whereabout do the developers give away value in joint negotiations?
What we're seeing, it's not even an option at this point, is less that the value of certainty and the value of risk protection is being given away now. And those two are in both the lease agreements, timelines, and I would call them liquidated damages in the EPC contracts, because there's not a market to assume those on the other side. So the developers are losing those negotiations more and more.
Yeah, it's interesting. We've obviously seen the market evolve a huge amount over the years. There's existing
Mhm.
platforms that are seasoned, and and there's a number of new platforms in the market. Generally speaking, do do you think developers truly understand kind of the downsides of what lies within their contracts, and what risks they're kind of involved in?
Yeah, in the conversations I'm having, and these can be, like you said, either long-term tenured data center developers that have been in this game longer than we have, or those that are new to the industry, because there's such a massive flow of capital. They certainly are aware of the large risks, and those are the ones that are prompting the phone calls to all their outside support systems, if it's outside counsel, Marsh, and everyone involved in their support system. They're identifying the large concerns, and those are, I would say, the largest flavors are those SLA terms. But now the new, more popular one is also delayed startup, right? Timing the delivery of these long lead items for power generation, the completion of a satisfactory building that can make it through a commissioning process, and also then up and running is a major concern, and it's a big gap for those developers, because financing is also in some instances attached to it. So
Yeah.
our clients are identifying, I would say, the lion's share of the most material risk. But there's also operational risk that, just because the industry is moving so quickly, we're seeing can be often overlooked. Something very simple, a great example I have from industry coming from both sides, fiber and data center, would be that, every data center requires connectivity, and generally redundant connectivity for the fiber network. Building access agreements are how those are generally provided, and they're a license agreement that allows a fiber provider to enter the data center to the meet me room, or even further beyond that point, but generally the meet me room. And overlooking some of the access rights that the fiber providers have can often lead to a lot of risk and unknown risk or unexpected risk to data center providers.
Yeah, that's interesting. And like, how exposed are some of these operators then, do you think, from what you see, and what is it shocking? Is it, how well are businesses out there set up to kind of manage and mitigate risk generally?
Yeah, each one that we work with is handling it differently, but I can assure you they all have their attention on it, and they're trying to move and solve for it at lightning speed.
Yeah. Yeah. Okay. Have you, how often have you seen, within your time in the industry that, it's the risk and the occurrences has really killed kind of exit value, or the value that you derive from a deal, for example?
Yeah, I think it's tough to put a thermometer on that at the moment, and the reason is the industry is just so hot. The vacancy rates in data centers, and that's hyperscaler all the way down to local co-location, is still at roughly 1%. So there's still such a massive demand for these assets that I'm not sure the valuations have hit the marks yet. But if I were reading the tea leaves, it's going to come in a few years when these delayed startups for the hyperscale and the co-location facilities aren't being met. So there's delays or those SLAs are getting bumped into. I think those risks and the associated liquidated damages or SLA credits that are associated with them are something that's going to come, and it's going to be a real relevant factor for the valuation of these businesses in the next few years.
Yeah. Okay, it's interesting. And from a hyperscaler perspective, what's the dynamic of that relationship between hyperscalers and developers? Are you seeing a more aggressive kind of stance from hyperscalers, the developers kind of pushing back? Is there, what do you see in that respect?
Yeah, it's again with the ever-changing ground, some in the data center leases for the hyperscalers that we've seen, those SLAs and some of the terms are only becoming more strict or more harsh, even, as months go by. So it's a real-time exploration. I can tell you the relationship is interesting. From my purview, if you're a data center developer and you're targeting hyperscalers, they seem to be, quote, the belle of the ball in that industry, right? They're the ones taking down the massive power loads. They're the ones signing leases for massive facilities. So a lot of the investment capital is chasing those leases and those tenants. And what you have is what appears to be a massive amount of competition. And with that comes folks willing to assume more risk on the SLAs or assume more risk on delayed startup or agree to a more aggressive timeline for startup or completion. And as more and more data center providers agree to those terms, we see a slippage that not what once was off market or hyper aggressive is now the market standard, and we're seeing that through and through.
Yeah, yeah, and how does it differ with the neo cloud as well, the neo clouds as well, over the last kind of few years? Similar
Yeah,
dynamic, more aggressive on that side. What do you see there?
I think the market's catching up with NeoCloud. They're the fascinating newcomer to the market, and I get a chance to work with a few of them, and it's exciting because they're taking down similar massive workloads. They're assuming a lot of risk because they also have the property, the GPUs themselves, which, data centers are very expensive, but I can assure you filling them with new NVIDIA chips is equally as expensive. So there's a number of risks more inherent to that industry, like a former cloud providing data center. But from a developer standpoint, we're seeing a new peak of interest emerging right now in servicing those neo cloud provider tenants.
Yeah, is there a sense within the developer world the neo clouds are riskier plays, and the hyperscalers are the more kind of like you say, the belle of the ball. They're the tried and tested almost, and more of a known quantity.
Yeah, that's exactly right. And I think where it stems from is actually the credibility, the actual credit for the tenant, because financing is now becoming a little bit more tricky to get. While there's a massive amount of capital, I think lenders are catching up with the risks inherent to too many, eggs in one basket for one hyperscale data center customer. So the neo cloud and the neo providers don't have the Mag 7 names behind them. A lot of them aren't publicly traded, and a lot of them are newer businesses, so they haven't had a chance to get rated from a credit standpoint, and certainly not to the level of those Mag 7 household names, the Metas, Googles, Oracles, Microsofts that we all know. So they're having a little bit of more difficult time taking down that space or getting the attention of the developers if that developer has a hyperscaler on the hook for the same facility.
Yeah, yeah. You talk about investors and their role and the private equity firms. What do you see that they kind of get right? I mean, I remember going back to PTC 24 when we were there and we were speaking to a number of investors, and they were saying there's a lot of money in the industry that's probably being placed without a great deal of due diligence, and that's probably going to get reined in some way over the next 2 or 3 years. But what do you see that those firms get right and wrong when kind of underwriting risk?
Yeah, I think there's so many facets to the risk. I think from the investment standpoint, they're all, because it's such a gold rush in the industry right now, that they're all very well intentioned and have the right direction. I think making sure, I think where we're seeing now with the new NIMBY NIME is probably the biggest risk, right? We're seeing some developers leave states that where they were previously operating in, or leave sites, walk away from those, which then puts them behind the eight ball to start up a new facility, go through zoning potentially, and meet a new market, both from a tenant perspective and also from a development perspective. So I think rushing into markets very quickly is probably one of the biggest risks that's being overlooked at the moment.
Yeah.
I mean, I was just reading the news yesterday with a colleague, and I saw that Denver put a moratorium on data centers being built within the city limits. It's fascinating because in the industry, right, telecom, the former telecom had its markets where there was a lot of a heat map of headcount and talent. I would say that Dallas, Seattle, and Denver have the biggest headcount for data center talent, and that goes from operators, developers on the legal side. So it's interesting that a city that's doing very well and benefiting from the talent in push and the investment of data centers is putting a moratorium up. They're following, I think, the Maine standard, where Maine about a month ago issued a moratorium. I think what we're going to see now is a sharpening of the tax credits or potential coming, that those tax credits per state might dwindle or get rescinded or clawed back. And that's maybe how it starts. So I think the big risk right now is finding that right location where you won't have issues getting permitting, won't have issues getting developed, being able to maintain a schedule with your EPC contractor so that you can commission and start collecting rent is going to be, that's the new challenge. That didn't, I don't think existed to the same degree, 5 months ago.
No, that's really come to the fore, hasn't it? There's the kind of feels like the industry's under a microscope now socially,
Hmm.
and more than it's ever been. And look, I don't think the industry ever shied away from being scrutinized. Personally, I know people take it very seriously. I know that the people in the industry do care about the perception, but it just
Hmm.
feels a significant shift over the, like you say, 5 or 6 months, and it feels. It feels like kind of need to address the balance a little bit and do a small part, play a small part in shine a light. But yeah, I mean, do you think that's going to continue over the next 6, 12, 18 months, right? I think it's only
I
going to.
do, yeah, because I think it's a great point. I mean, when we have Kevin O'Leary from Shark Tank on social media talking about the NIMBY NIME issue and fighting it and combating it for his own now investment in data center space, I think it will continue to progress, unfortunately, because it's gaining traction and notoriety, and those constituents at the, in the city state level are hearing it, and they're probably asking right now as we record this, what can we do? What should we be doing? Are there protections for the electric from the meter? Is there, the water issue that's getting notoriety? It's unfortunate for the development. I'm a huge proponent of data center development. I think it's critical to our country. I think it's critical to our economy on the global stage. So it's unfortunate because coming from industry, a lot of these concerns, in my opinion, are overblown. Now there are the one-offs where there may be issues, that are very subjective and minute. But by and large, the water consumption concern, these are largely closed loop systems that our developers are utilizing, so they don't consume much water, they don't release toxic water. And the power consumption, like we identified, is largely going behind the meter. So if anything, these are going to become potential plants that could provide back to the grid in a God forbid situation, but they're not dependent on the grid and they're not burdening the grid. So the more the technology advances, the less burden and the less concern these things will have. But I think curtailing development will only curtail also the technological advancement that's going to help it.
Yeah. And with the industry being so agile and fast paced and ever changing, I'm assuming, risk will move with that, won't it? As a almost as a bit of a bubble. So I'm assuming, having a structure internally to manage risk and externally as well is critical.
Yeah, absolutely. I think right now, if I'm reading the tea leaves properly, we're hitting probably the head of risk. It's coming from every angle. The influx of capital, the amount of development underway currently is massive. I think that will at some point hit a peak, and the technology will also catch up with solutions to some of the call them notorious issues that people are concerned about. So there's an easy answer there. So I do think we're hitting or approaching a peak of risk. And that'll flatten out, especially as the industry catches up with itself.
Yeah, yeah, and if you were, putting together, if you were part of a new platform, what would be your advice be to an investor or executives putting a new platform together to really mitigate risk and set up properly from the start, really?
Yeah, that's actually, you save some tough. Doesn't answer the question is have all your ducks in a row, right? The problem with that is there's so many facets to the business. It touches real estate, it touches zoning, it touches construction, it touches procurement and large, procurement of long lead time turbines, power generators for redundant power, and leases. So I think if you could bucket each one of those industries that are distinct industries themselves that are part of the data center ecosystem, having your ducks in a row the best you possibly can as soon as you can is the best advice. I wish I could be more specific, but like I said, it's coming from all angles at the moment.
Yeah, no, that's fair. And do you think there's any kind of risk that people almost worry too much about or don't worry enough about? Is there an area that's kind of overlooked or over
Hmm.
considered on these sorts of things?
It's not necessarily a massive one until it breaks, but that's, I think, like anything, but one that we speak and advise our clients on often because I've had experiences personally in when I was on the other side of the table and operating, is actually that marine cargo risk. It comes as a shock, but in my experience, we've had generators that were required for the performance of a data center get damaged in transport. A large uh, generator set hitting a bridge while it's on the back of a flatbed, and the amount of frustration, concern, and material risk to the business that created overnight, literally overnight, was something that wasn't thought of. Another one is piecing together the EPC contract with the design contract. If there is a delay, one of the hypothetical risks that I think is often overlooked is what happens if some of this long lead time equipment's delivered first? Where do you store it? Do you have that insured? Because it's a very expensive item that has business interruption concerns attached to it. So I think one of the more overlooked components of the entire process is actually the transport piece.
And politically as well, with global
Oh
shipping
yeah.
at the moment as well. I mean, there's things like that, I guess, that can't be overlooked, in
Hmm.
terms of how an impact that can have on capacity and just movement and in the shipping lanes across the world.
Yeah, no, absolutely. And a new flavor of risk that I hate to say, I'm nervous to say, but making sure terrorism threats and items like that, as these hyperscale data centers and data centers in general house all the critical information, I think making sure that there's protection around those. Um, I don't want to jinx anything in the world at the moment, but that's something I would also be focused on.
Yeah. I mean, the threat of from that angle is prominent throughout the world, and has been for decades now, hasn't it? But
Hmm.
the just generally, when you do you see businesses kind of realizing that there's problems or they've got the risk element wrong earlier on in in the kind of process, or when in the journey, or when it's kind of much later on and much more of a crisis?
It depends on the issue. It really does. And as these clients, businesses, and data center developers are up and running at lightning speed, it'd be a good thing to be a coffee or caffeine purveyor to some of our clients because they're just running at full speed all the time to keep up with the demands of developing data centers. I think we do our best to help them identify them proactively. I know their outside counsels are doing the same thing. Their risk advisors are doing the same. It's just there's so much to manage that getting ahead of it as much as possible is certainly the best practice, but there is so much unknown that we don't know. And like I mentioned, the transportation thing could creep up. So we're seeing a mix, right?
Yeah.
Identifying it and doing your best to mitigate in advance, but also jumping on it to resolve it quickly is all keen to the industry and issues that they're facing.
Yeah, and as we discussed earlier, there's so much opportunity, there's so much
Mhm.
potential reward, there's so much work to be done. I mean, everybody in the industry is stretched. Talent is continues to be a problem, and people are working long hours. I guess people want to get deals done and kind of take on more risk than they probably would like, but it gets the deal done. It kind of the temptation is there, isn't there? Really, I guess.
Yeah, absolutely.
Yeah,
Absolutely. The gold rush. That's what I
the
call
gold
it. Yeah.
rush. Yeah,
Yeah, it's a fiber optic cable of, 15 years ago. It's a plenty of opportunity and a lot of demand.
yeah. No, that's good. That's good. Well, look, I really appreciate all the input. It's clear
Yeah.
that risk is everywhere across the industry from all aspects, whether that be power, like you say, shipping, land acquisition, or everything really. I mean, you guys are going to be extremely busy, it seems like, helping your clients and customers. But what do you think the rest of the year looks like for you guys at Marsh and for the industry generally?
Yeah, continuing to advance coverages and advance solutions for our clients. That's what we strive to do. So I can tell you, I thought I was busy 3 weeks ago. I'm busier every week. I think our clients are the same. I see for Marsh specifically, our digital infrastructure practice is just growing leaps and bounds with so much specialty that we have and the bench strength that we have of understanding and the investment that the business has put into digital infrastructure. So I see nothing but growth on our side, which is mirroring all of our clients.
Yeah, no, it sounds like a very busy time ahead for you guys. And for people listening, I know this has been kind of a top level, top line discussion on risk. It's far more detailed than what we can give it credit for on one podcast episode. But in the notes below, we will put a link to Derek's LinkedIn profile and Marsh as well, so that anyone can check out services and reach out to Dereck for sure. And Yeah, Dereck, obviously my final question on every podcast episode is always, if you hadn't been exposed to the data center world and you weren't in it now, and what do you think you'd be doing? Where would your career have taken you, do you think?
Well, mine might be the easiest answer. I think I may still be handling fiber. I'd still be
Okay.
a fiber lawyer. Yeah, if it weren't for the data center space. However, the fiber world is ever changing. Hyperscalers and data centers are now some of the most prized tenants, and I call them tenants, but customers in that industry. But yeah, I think I would still be in telecom in some form or fashion.
Yeah, no worries. And then I guess my final question. People want to meet up with you this year. Any conferences you're attending or heading to, or the team at Marsh?
Oh, absolutely. So we'll be at all the leading industry events. We'll be in Cannes, I believe, in 2 weeks for Data Cloud. The standard Metro Connects. We like to have a Metro Connect. We'll have a big presence there, and then PTC as well. We try to get on panels as much as we can, but if not, please reach out, talk to anyone. If you see someone with a if you see someone with a Marsh badge or anything, please, introduce yourself. We're happy to help in any way we can.
Yeah, excellent. And yeah, we'll be there too, and at those events, and hopefully catch up with you there. But David, thanks for being a great guest on the Data Center
Yeah.
Exchange. Really interesting topic, huge talking point across the industry right now. And like where there's opportunity, there's always risk, I guess. So thanks for highlighting some of those and talking around it. Have an amazing rest of 2026. And when I move out to the States with my family, I'll be coming to see you for sure.
Absolutely. And I look forward to seeing you in a couple of weeks in Cannes. But otherwise, Del, I sincerely appreciate you having me on.
Yeah, thanks, Derek. All the
Have a
best.
great day.